Big geopolitical developments that we touched at the top of the hour and we need to return to now. The euro is going higher and stock futures are going higher on the prospects of this US-Russia conversation around Ukraine. Tentative expectation, tentative or more than tentative perhaps, risk on for Europe. Looks like the path ahead.
I think so. I think very much tentative. I think, this is definitely a relief rally on the chance that we might be seeing an end to the Russia-Ukraine war. And it's in the context that European assets have been very beaten down over the last long period of time. Obviously, European equities have been doing well recently, but the euro is very cheap. The power of the euro-dollar rally shows, how much kind of a war discount is priced. But I think, we have no idea what the path of this is these negotiations might take, how long it might take. And so I think if someone's buying the euro dollar on this narrative of, peace in the east of Europe and therefore better times ahead, I think that's a very, very dangerous trade if that's your main argument for doing so.
Do you sell the euro dollar on the fact that it looks like the Fed ain't going to be cutting rates anytime soon?
No, I don't think you do. I think that the big news the last 24 hours in currency markets is Donald Trump gave the green light for the 2025 bearish dollar trade to begin. What he did is he made a comment to undermine Fed policy. He said there should be lower rates. Now, this would be bad at any time, but doing it just before a hot inflation print with a load of inflationary policies is extremely dangerous for the dollar. It's sending a message that this is a country where the government is going to continue to pressure policy to be too easy for what inflation needs. Now, there's another country where that has happened very prominently in the last few years, and I can tell you the Turkish lira has depreciated an awful long way. Of course, the US dollar is not the Turkish lira. There's very big differences. But the fact is, as long as that we have a government undermining monetary policy, not letting the restrictive policy go into place, that is negative for the dollar. When it comes in the backdrop that the uncertainty around trade policy is undermining US markets' exceptionalism, this is the green light to start the bearish dollar trade. Now, it'll continue to be extremely volatile because every tariff headline will get a knee-jerk dollar move higher. But it's going to be a rocky path of the dollar slowly depreciating.
Mark, I'm going to ask a controversial question, as I always do. What's the likelihood that before the end of the year, we get a hike before we get a cut out of the Federal Reserve?
I think it's very likely. I think economic data might say that we should. Yeah, Kriti, as you know, I've been in that camp for a long while. I always thought, from early last year, I thought we might only get one cut. Obviously, we got more than one cut. I never believed the amount of rate cuts priced, and I always said this year it might be a hike more than a cut. Now, given what's happening, given what Donald Trump is saying, I think it's going to be very hard politically to give that hike and until it's absolutely warranted, which means there's a good chance we get no move either way from the Fed this year. But yeah, I'm very open to the idea that it could be a hike as the next move potentially later in the year.